Hello and welcome to this video. Today I'm going to be doing a stock analysis on Bank of America. Now the reason I'm doing a stock analysis on Bank of America today is because of the way the interest rates are performing in the United States, given the new tariffs that Donald Trump has made, which means the interest rates are going to increase with inflation. So previously this year people thought there were going to be 3 to 4 interest rate lowering, but I personally think it's only going to be 1 or 2 because of tariffs. If you don't know the economics, if you imply tariffs, there is going to be more inflation. If there's more inflation, you are going to see more interest rates. Now, the way this works is because imagine a car manufacturer gets a 20% tariff on his parts. This means he now has to earn 20% more on those parts sold, which means he, of course, is going to have to increase his price, and he's not going to increase it by 20%. He's probably going to increase it by 25% because he also needs to keep his margins up. So that is the way inflation works with tariffs. So whatever Donald Trump is saying about tariffs are going to increase the American economy, short term it's going to be quite bad, just given to the economic principles that are rooted in history and fact and math. So yeah, that is the reason I'm going to be highlighting some banks. Now I do have other banks videos on my channel as well, so you can go check those out. Now always remember, this isn't financial advice. This is purely education and entertainment. Now with that being said, let's get started. Now we take a look at the performance of the stock since last year, which is right around here. Let me find the 1st of April real quick. Alright, 3rd of April here. As you can see, we were trading at about $37, which is only 4 away from now. So as you can see, it is quite a bumpy stock. You can also see that down here in the RSI. And you see it increases and lowers and increases and lowers. And currently, we have just come out of a pitfall down here in the RSI, and we actually came straight from some hilltops up here. Now, something I do like about Bank of America is that they pay out dividends quite often. What I don't like is how little they pay. As you can see here, that's only 24 cents, but of course it is 4 times a year, so that is of course something to keep in mind. Now, if you look at the stock a bit further back, as you can see here, see it has traded a bit higher than a bit lower than it is now for quite some time, but we can also see it has traded higher back in 22 when banks were doing incredibly well because of the interest rates during COVID and also the energy crisis. I think those are going to increase, and I think Bank of America is going to make a lot more money. You can also see that down here in the, as you can see, income statements here, they increase, and their margin has did fall a bit from 21 because the rents were so high, the interest rates were so high. And now, quarterly, as you can see here, they have already increased quite some. And I personally think that is going to continue in 2025. We are going to have the first earnings here in 13 days. And I can't wait to see how much they do. I think they are going to surprise their EPS by about 5-6% personally. We can also see they usually do quite nice on the earnings here, which I like to see that they're actually quite close to it. Sometimes companies set their earnings quite lower, which means that then when they surprise by quite a lot, the stocks shoot up. I hate when companies do that. And 4-6% is quite decent, not gonna lie. And as I said, they pay out dividends 4 times a year, 2.4%, which is incredibly low for a bank, to be honest. Many European banks could pay out quite a lot more. So yeah, I'm not sure why Bank of America pays out this little. Now, if you take a look at some seasons, let's just go back until 2011. As you can see here, it performs quite decently most of the years. As you can see here, well, it's actually 50-50 at this point. But once it actually performs quite decently. Of course, then when it falls, it also falls quite hard. As you can see here, back in 2011 and 22, we had quite bad years. But most of the time, when it falls, as you can see here, otherwise it is 17.5 and below. But when it performs, as you can see here, 100% in 2012. But then in 2021, we see 48%, 41%, 34%. You get the gist. When it performs usually better than when it falls, which is quite nice to see. So this is also one of the reasons I like it a lot. It is a stock that isn't going to make you a millionaire overnight because it's just not going to increase that much, but it's great to have in the back of your portfolio also because they have done stock splits in the past, which I'm personally a fan of. Now, if we look at the technicals on it, you can see for the day it is a sell, it is a strong sell even in the moving averages. But for the month it is a strong buy and it is a buy here. And now you might wonder why that is. Well, as you can see back here in the start of March, we were a bit higher and then we took a quick tumble, but then we rebound quite far until we had this drop here. Now I personally do think we are going to regain some of this soon. That would be in, was it 13 days? Also, just given the fact that we are up for almost 1% for the day, and also because we see the moving averages are very close to each other, which means chances are we might see a golden cross soon, which is going to be an upwards going momentum. So I like that also quite a lot. So I think it's going to increase, and also just the fact that we are laying on a current support line, as you can see here, where we are trading currently, it is on a previous support level over here. So that is of course great to see, which means that it has rebound. It's gonna bounce on here, as you can see, and then if it increases, it's gonna increase probably nicely. And then the next proper breakthrough point, that is gonna be up here. There is also a little one here, but there's just, it's too small and it's too far apart that I think it's gonna be relevant. But in the next proper support level, it has to break through. Breakthrough level is up here, where we have these two taps. But we could also see a smaller one right here, where we see some bottoming out. That might also be somewhere where it's going to rest a bit until it increases. But I definitely think it's going to break through this, and then it's going to continue up here within the year. Now, if we go further down and look at some analyst ratings, as you can see here, we have 24 analyst rating, and they are amazing. 15 strong buy, 5 buy, and 4 hold, so quite great. I do think it's quite realistic on this stock. We often see that it's going to be 100% up or 200% up. I think it's quite realistic with this one. As you can see here, the max is $41 up. I think that's quite decent. I think it's going to end up in about 55, so a bit more than the average. I think is quite realistic. So yeah. And also, if you look at just the annual, as you can see here, we see they expect also to increase their revenue, and I think that's also because Bank of America know interest rates are going up, so they are also increasing their estimates. So yeah, quite nicely. Now that was my stock analysis on Bank of America. If you did like this video, please don't forget to like and subscribe.